One Up on Wall Street, Peter Lynch. Audiobook Summary. Welcome to Global Audiobook Insights. Success in investing is not reserved for the experts on Wall Street. It is for those who are willing to observe, learn, and act with patience. Peter Lynch, one of the most successful investors of all time, teaches us that ordinary people, like you and me, can achieve extraordinary success in the stock market. The truth is simple. If you pay attention to the world around you, if you remain disciplined, and if you trust your own research more than the noise of others, you can build wealth that lasts a lifetime. Today, let's dive into his timeless lessons from One Up on Wall Street and see how you can turn daily life into a source of investment wisdom. Key lessons. 1. Invest in what you know. Lynch's golden rule. Invest in businesses you understand. You don't need to be a financial wizard. If you're a customer of a product or service, you already have an edge. He believed the average person could spot great investments before professionals just by paying attention to everyday life. Example, you notice a restaurant chain is always full, or a new product everyone is suddenly using. That could be the beginning of an investment idea. 2. Do your homework. Spotting an opportunity is only the start. The real power comes from research. Lynch studied balance sheets, debt levels, and growth prospects before making decisions. His advice: never buy a stock just because someone else told you. Trust your own analysis, because you are the one putting your money at risk. 3. The 6 categories of stocks. Lynch divided stocks into 6 types. Slow growers, big, stable companies with low growth, safe but limited upside. Stalwarts, strong, steady companies like Coca-Cola, good for moderate returns. Fast growers, small companies with high potential, but also high risk. Cyclicals, businesses tied to the economy, airlines, car makers. Great in booms, risky in recessions. Turnarounds, struggling companies that might recover. High reward if you're right. Asset plays, companies undervalued because of hidden assets, like land or patents. Understanding which type you're investing in helps you set realistic expectations. 4. Patience beats timing. Most investors lose because they try to time the market. Lynch's advice is clear. You can't predict short-term movements, but you can hold great companies long enough to see them grow. He famously said, "The real key to making money in stocks is not to get scared out of them." 5. Ignore the noise. Wall Street analysts, TV pundits, and market gurus often create fear and confusion. Lynch encourages you to ignore the noise. Instead, focus on the fundamentals of the company. When everyone is panicking, opportunities often appear. 6. The power of compounding. One of Lynch's strongest messages is the magic of compounding. Holding a good company for 10, 15, or 20 years can multiply your wealth in ways short-term traders can't imagine. The earlier you start, the greater the reward. 7. Stay humble and keep learning. Even Lynch admits he made mistakes. The key is not perfection, but discipline. Diversify, learn from errors, and stay consistent. Success in investing comes from preparation, patience, and persistence. Remember this: you don't need Wall Street to make you rich. The power lies in your observations, your discipline, and your patience. Look at the world around you. Opportunities are everywhere. Invest in what you understand, trust yourself, and let time work in your favor. Wealth is not built overnight, but step by step, choice by choice, over years of persistence. Stay focused, stay patient, and you too can have your one-up on Wall Street. If you found this audiobook summary inspiring, make sure to like, share, and subscribe for more life-changing lessons from the world's greatest books. Remember, your financial freedom begins with knowledge. And today, you've taken another step forward.